Thank you, Mr. Chairman, for giving us a second round here. And as you all know, Mr. Michel and Mr. Himpler, Director Cordray was in front of our committee yesterday, and I raised a concern with him about the Bureau's regulation on international remittances, and I shared with him a concern that was raised with me from a constituent, the Fort Knox Federal Credit Union. And as you can imagine, the Fort Knox Federal Credit Union serves many service members who are deployed overseas, and they simply want to be able to send some of their paycheck back home to their spouse while they're deployed. And because of the Bureau's overly burdensome regulation and the implementation of those rules, the credit union had to basically get out of the business, and that obviously was a huge inconvenience for those service members and their families. Director Cordray's excuse was that Congress made him do it, and that it was our fault that this was happening. And while Mr. Himpler, you don't represent credit unions per se, but you all are observers of the Bureau, I just took a look at the statute, the Dodd-Frank Law, Section 1022, which actually requires the Bureau to look at cost-benefit analysis and to mitigate costs such as this. Does the Bureau have the discretion, does Director Cordray have the discretion to ease the regulatory burden on regulated parties so that these kinds of consequences do not occur? And by the way, I asked him, the credit union in question called him thinking that this was an unintended consequence. And they reported to me that Director Cordray himself told them, no, this was an intended consequence. Can you comment on that?
Sure. No, he absolutely has the discretion to go the other way. It's one of the bizarre things from my point of view. I understand what was going on in that environment when they passed Dodd-Frank, but from my perspective, you don't want either side of the aisle. You don't want to create an agency like this because you might find yourself in a situation where you're on the opposite end of what you just created. Even if the Trump administration doesn't fire Director Cordray, there will be a new director. If that's somebody like, just say, I don't know, Todd Zawicki from George Mason, he will have the discretion to reverse a lot of this stuff, just outright authority to do it and to not do anything else that he doesn't want to do.
Mr. Himpler, can you comment on Director Cordray's pointing the finger at Congress instead of looking at what the Bureau can do itself to ease the burden on regulated entities like this Fort Knox Credit Union that no longer can serve its deployed service members?
Thank you, Congressman. Yes, I can. I think one of the basic problems here when it comes to not only remittance but also other consumer products is that very few people, especially at the CFPB, but I would say even just as equally at some of the other federal regulators, have no experience in extending credit to consumers, have no experience in some of these products, be they a remittance product, be they an installment loan, be they a subprime vehicle finance loan because you're trying to extend credit to a college grad that needs to finance his car to get to his first job.
Well, I would just note, I mean, you know, the Bureau seems to be able to have the discretion to ban financial services and products. I don't know why it doesn't have the discretion to help service members deployed overseas send some of their paycheck back to their spouse back home. I think that's absurd.